Hello, everyone. Hope everyone's having a great day so far and enjoying the conference in London. So today I'm here to talk to you guys about Bitcoin's current adoption and unstoppable future. Before I jump in there, I just want to give some background on Secure Digital Markets and myself. So Secure Digital Markets was a company I founded back in 2017. The original thesis was pretty simple. At this point, I'd already been in the digital asset space for about 2 to 3 years and had dove down the proverbial rabbit hole. My main mission was really the mainstream adoption of digital assets. And to me, the kind of thesis was simple. If I could help institutional capital flow into the space, capital would lead to talent coming in, talent would lead to development and innovation would lead to adoption. There was a lot of inefficiency in the space, and I kind of had the foresight to realize that if we could improve the sophistication of these on-ramps, and I started with an OTC desk that rapidly evolved, then again, those capital could flow. And that's really what I'm here to talk to you about today, because we're on a precipice where I think this institutional adoption is happening very, very quickly. And we're really at the edge of something exciting. So outside of Secure Digital Markets, I'm also the founder of the GDA Group of companies. Our group ecosystem kind of touches on a wide variety of segments within the digital asset sector. Secure Digital Markets being the trading and sales arm. We also have a ventures arm focused on early stage projects. Investments through our fund management arm. We recently announced the Metaverse Investment Fund, which is the first Metaverse fund in the world in partnership with Tokens.com, a public company. Rare, which is an NFT marketplace, as well as our wealth arms, which focuses on education for various financial incumbents in the space, family offices, etc. Kind of broad spectrum under the umbrella, and partially why I'm talking to you guys about this segment today is we serve a wide variety of market incumbents. Everyone from institutions to hedge funds to BTM operators to processors come to us for liquidity, investment, etc. And really pivotal in the kind of adoption that we're talking about here. So, a lot of you, considering you're in the room today, probably know that Bitcoin was invented and started in 2008 with the release of the white paper. But the kind of premise behind the radical technology of Bitcoin comes before that. In 1970, the first RSA public key crypto systems, as well as DigiCash and e-gold, were concepts that kind of led to the inevitable creation and listing of Bitcoin when it was first launched. If you look at the traditional financial industry, we do see and we are faced with an oligopoly. I think it would be hard pressed to see and consider where all of the, where financial innovation has occurred. Aside from credit cards and ATMs, this has been, slow moving. Bitcoin has kind of changed that by allowing systems to change. People still pay 3% for interchange. Merchants are, receiving 97 cents on the dollar. Transaction speeds, etc. I'm sure you're all familiar. I won't go too deep, but this is what started with Bitcoin, which is evolving into a completely shifted financial ecosystem. So, quickly to look at kind of the macro tailwinds that we're facing today. Since the post-World War II era, we're seeing the highest rate of inflation. Kind of different to what we saw back then. The job market, especially post-COVID, is in a totally different place, which would have countered that inflation. Bitcoin today is truly one of the only things with an inelastic supply in a world poised with quantitative easing and money printing. Bitcoin can be seen as the antidote. So how Bitcoin gets to infinity. There's various bull cases for Bitcoin that we can look at as store of value all the way up to global reserve currency. We've seen adoption, the first of 197 countries in the world to adopt Bitcoin through El Salvador. But what is truly going to take us from where we are today and bring us to those next levels? So first, let's look at the existing market dynamics. A fish and a whale walk into the bar. If you look at both wallet holders that have 1,000 plus Bitcoin or 10 plus Bitcoin, both of these core groups in the space right now are accumulating Bitcoin at faster rates than ever before. And this has been steadily growing since 2008. So the believers continue to believe, continue to double down, and continue to remain and store and lock their value within the ecosystem. This is, an obvious first predicator to the supply and demand dynamic that Bitcoin is, fundamentally based off. By the data, if we look at the institutional cohort a little bit further, 7 on 10 institutions are preparing to invest into digital assets in the near future. 82% of institutions are looking to increase their exposure in the next 2 years. 84% of European and US investors have indicated interest. We also see that 8 to 10 investors feel that digital assets have a place in the modern day portfolio. If you look at all of these categories, the majority of them do feel and see and believe that Bitcoin and the monetary revolution we're experiencing is here to stay. If you look at it, the boom of today, everyone needs to adopt and forget adopt immediately, but consider a blockchain and Bitcoin strategy as part of their ecosystem. Just like in 2009, an internet and technology strategy. 2016, people adapted a digital strategy. In 2018, 19, that was a social strategy. This is kind of a core, whether you're a corporate treasury evaluating your balance sheet, the case studies are there. MicroStrategy and how well they've done, and Tesla and their accumulation of Bitcoin on the balance sheet. If you're a corporate treasurer, it may not be part of your initial mandate, but it's on your mind. You're seeing the headlines, and you're starting to really contemplate and consider this on a wide spectrum. So if you actually look at the top reasons why these hedge funds and VCs want to actually purchase Bitcoin and get into digital assets, aside from speculation, which is still rampant, and the industry has widely been led by the early adopters, and speculators have been early adopters thus far. They see the percentage for this to sit in their opportunity for this to sit in their portfolio and serve as a hedge as well. It's uncorrelated to other assets, proven through and through. And also against an inflation, and this is probably one of the categories that has grown the most, as a hedge against inflation, which is really something that is prevalent and on the minds of all these groups. When you talk about the percentage allocation, you can look at various market research data and reports, from leaders like Fidelity, who've spoken about a 1 to 3% allocation of your portfolio into the digital asset class. But actually, you'd be surprised that there is almost 35% of these incumbents today in some new studies that are showing they're actually looking at greater than a 3 to 5% allocation, upwards of 5 to 10%. And the average, obviously, sitting somewhere in the middle of the 4 to 6% range based on various data sets. That is a significant factor. And if we kind of account for some of the supply and demand metrics that I previously aforementioned, this portfolio allocation could drastically increase given the bull case of Bitcoin and digital assets as a whole. So what are actually the leading barriers to adoption? If people are considering it, they're interested, they want to actually invest some of their cash, one of the leading barriers is the volatility, the price volatility. I'll bet it's definitely come down, but there are 20% intraday swings that have been apparent. But that is drastically decreasing. I think Bitcoin, by the volatility metrics, is today only about the 52nd or 53rd most volatile currency in the world. This significantly reduced since 2018, 2019. Lack of fundamentals with respect to its valuation. However, there are a lot of models that are proving consistent over time. The more data we have, the more time that's gone by, the more that people and analysts can actually look at this data, interpret, understand it, and account for how this looks going forward. And as well, market manipulation, like any industry in its infancy, even industries in their maturity, art market, gold market, there is manipulation, and there's a lot of reasons why you could point to that. But as these institutional investors come in, Bitcoin continues to be a global decentralized phenomenon. That manipulation will continue to go down just by nature. So let's look at the VC cohort, because I think it's really interesting to see where the money's going. Smart money is always kind of a predicator for long-term growth in any sector or industry. And we've actually seen a continuous minus in 2017, where we obviously saw had a crypto bear market for quite some time, especially with the ICOs and tokens. 2021 has seen almost a 2.5, 2.7x increase in VC investment into the space. This is smart money. These are some of the smartest minds globally and across the world that are putting their money into the sector, doubling down on early stage projects, on investors, on talent, and really putting their money where their mouth is, so to speak. Further, I think that you know, the rise of the social on-ramp is a really key consideration here. So something that not a lot of people talk about is obviously the mainstream adoption and what's going to really push that to the next level. Aside from price speculation, which has led a lot of people right now to come into the market, we're starting to see social networks adopt various forms of integrations, Twitter being one of the first to lead with Bitcoin integrations and tipping and the ability to transfer it. But these social networks captivate and capture audiences of hundreds of millions to billions of people. What if a phone network, a massive social media, any of the top 10 really come in, use an existing currency aside from one of their own, that brings adoption into the space? Everything from CBDCs, I don't look at it as competitive. To me, all the innovation, anything that relies on a blockchain, anything focused on growth and adoption of what would be considered the blockchain ecosystem, inevitably does provide benefit. It opens up everyone into the ecosystem, familiarizes them with the use of this technology, how to store it, custody it, trade it, understand it. And as we continue to see innovation, this process will become much easier. I right now can go on my phone in a minute on 5 to 10 different apps that I have access to and purchase Bitcoin fairly quickly. However, the process is still, for someone who's not too native or familiar with technology, with the financial landscape, with trading, it is still not as turnkey as it can be. But we are seeing that development. Apps are starting to gain popularity and notoriety, and they're really making this process quite a bit easier. So further to that, I think the user growth relationship, you look at Metcalfe's law talking about that adoption. As we continue to see the user adoption, the numbers are rapidly increasing. The value of the network is going to go up. We have hundreds of thousands of merchants worldwide that do accept Bitcoin, which allows it to have utility. So I think that really, I'm missing a little point here, but it's not a problem. That if we have the social adoption, we see the capital coming in and the innovation. Those are all really amazing factors leading to where Bitcoin currently is and going towards the bull case. Yeah, so with that, I have 2 minutes left here. Just kind of pass it off to any general broad questions.